What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol CEI for Camber Energy Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, obviously, the big update to bring you guys, since we have covered this one in the past, is the fact that we filled the gap underneath and then put in a hammer candle from the daily perspective. So I really like what's going on here. If you just note from the 30-minute intraday chart that, yes, little morning sell-off, then it rebounded and closed back inside of, which I think is the noteworthy part, Friday's range, right? So we filled the gap underneath, repaired the structure. Sellers tested, tried to go a little bit lower, was met with some more buying activity to trade us back higher, and again, close inside of the prior day's, Friday's range there. So that does strike me as bullish. But we're not just going to jump in long here because we have a hammer candle, right? We do need some confirmation before we potentially move higher, and that's where our good friend resistance trendline comes into play. So would you look at that? It's near perfect, using this as an anchor. Touch 1, 2, 3, 4, 5, and 6 into the end of the day here on CEI. So as of right now, in the after hours session, we're flat, right? We're right around here, so we are still below. If we can open below, then the trade that you could potentially take if you're really aggressive would be a break of the resistance trend line to get up into this 152, and then after that, the high here at 166, monitoring for continuation if we do get the breakout higher. And if you remember, we'll scrunch this chart up a bit, our overhead level after that is going to be 188. So that's, that's the bull side case here, the aggressive case to the upside. The more conservative trade, in my opinion, would be a break of the resistance trend line and then forming some sort of higher low and then another higher high, right? What that would do would sort of reverse this very small, right? This is nothing major, but a very small 30-minute downtrend that we have here, clearly forming lower highs, right? So we would want to violate that with an equal high, then a higher low. So then we have something like this, higher lows forming, and then the next higher high could be the trade entry long. If it happens to coincide with a break of this 152, then phenomenal, right? Then you have some structure there as well to help you out with where you should place your stop loss. So those are my thoughts here on upside plays. Clearly, if we do start violating and trading back underneath this 132, that's where I would stand aside and let the pullback shake out. As we mentioned in prior videos, whenever something has gone parabolic, oftentimes the pullbacks that you get go places that people don't think they can go or want them to go in the first place. So I wouldn't be surprised, like $1 wouldn't be off the table, in my opinion, if we do see a violation of this 132 again, and then some sell side activity lower. Certainly a bump in the road at 113, but I'd really keep an eye on the whole dollar as a line in the sand to remain bullish in CEI as we go forward. So those are my thoughts. Again, a lot's going to hinge upon what goes on with this resistance trend line. Can we open above it? Do we break above it? Do we reverse the 30-minute downtrend, the small one that's in play here? Those are the questions to be asking. So if you enjoyed the video, if you enjoyed the update, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.